Hello and welcome. You are watching First Tick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is my friend and colleague Amit Ranjan. And it's a Tuesday morning and the markets have opened marginally higher amid some positive cues in the post-market hours yesterday. India's retail inflation has eased to a 3-month low of 5.1% in the month of January, and I think what's more notable is that the decrease or the decline in food prices, which have declined, which have seen a healthy decline on a month-on-month basis. And it is important for the markets because it will perhaps give us cues on when RBI could proceed with monetary easing that the market is hoping for. And we also had healthy results from the likes of Coal India, which beat expectations across all metrics. But before we delve into, deeper into that, let's look at what we got in terms of a handover from the global markets. Amit.
Good morning, Suyash. Yeah, quite a bit of things happening in the global markets. S&P and Nasdaq slipped in the red in anticipation of inflation data. S&P 500 closed in the negative at 0.09%. Nasdaq closed in the negative at 0.3%. Dow Jones, however, was in the positive, ridden basically by energy stocks, even as tech stocks slipped. It closed in the positive at 0.33%. But the big news was that Bitcoin hit $50,000 level for the first time in 2 years. And this year is also the year of the halving for Bitcoin cryptocurrency. The date that has been set is April 22nd, 2024. It has been buoyed primarily on the back of expectations of rate cuts by the US Fed. Coming to the European markets, the stock 600 closed in the positive at 0.54%. The Asian markets are closed because of the Chinese New Year, and Nikkei, however, is in the positive this morning at 2.6%.
All right, and Indian markets, as I mentioned, have in fact opened slightly higher, but we are seeing a bout of volatility in the morning trade itself. We have in fact slipped into the negative territory as of 9:30 a.m. The markets had in fact Nifty, I'm talking about here, slipped below the 21,600 mark. We were at around 21,574, which is very close to the day's low. And the last 3 or 4 sessions, the market have been making lower lows and lower highs, which is which according to at least some of the technical analysts that we have been speaking to is could be a bearish pivot for the markets. And sensex is also trading with a cut of 0.2%. It has broken below the 71,000 mark. The mid cap and the small cap indices, they the correction is worse there. The mid cap index is down about 1%, whereas the small cap index has declined by about 2%. Volatility continues to remain elevated. India VIX is up over 2%, and it's at 16.4 levels. But these numbers are as of 9:30 a.m. this morning. The markets are rather choppy, and Nifty is pretty much hovering around that 21,600 levels. But to understand what cues to track and what are the levels that will be key for the headliners as well as the broader markets, let's also bring on board Mr. Brijesh Iyer of IDBI Capital Markets. Brijesh, thank you for joining us here on News9. First of all, in the last 3 or 4 sessions, as I mentioned, Nifty has been making lower lows, and now we are at the lowest level for the month of February. And even this morning, we are still defending that broader range that we have spoken about of 21,500 to 22,100. But what's your overall assessment of Nifty at this point in time? Do you expect this weakness to persist?
Good morning, Suresh. So I think I always had a cautious view for the month of Feb. Mainly because of the FI data which I was observing, they were maintaining a short position in the index future. So eventually what we are observing for the last 3-4 days, there has been a distribution in the market. There is a continuous selling pressure. We all do agree that because this is mainly because of the bank Nifty, because bank Nifty is much more weaker than as compared to Nifty. Nifty specifically, if we see, then I think now it's approaching the 50-day moving average, which is 21,500. So understanding is that we are going to trade in the range. there may not be a sharp fall. Maybe with the momentum, we may see 21,400 or an extreme scenario 21,300. I believe over those points, the market is likely to take some support. Right now, the immediate support is 50-day moving average, which is at 21,500 mark. So, and looking at the other parameters, like the way IT sector is folding, so I sense Nifty may not see that deep correction.
Hmm.
Maybe with if the Bank Nifty slips further slips from this 45,000 level, then maybe Nifty may correct by maximum 100 or 150 point max from this point of view. So maximum correction would be in 21,300. So,
All
but
right.
immediate support is at 21,500. That's the support level. On the way up, 21,850. So hardly we saw any of the trading session where we strongly close about 21,850. So the trigger is by any chance if the buying comes in the system and 21,850 is taken out on a very strong note, then I think the reversals will be there. Until and unless that doesn't, we don't see any of this reversal points. The Nifty will be in a range. Stock specific will be there. Like yesterday, IT was the sector which was performing. So today, healthcare, I think, believe there is some momentum in the healthcare space. It will a range bound with the stock specific. Only in the near term, maybe by any chance 21,200 is broken, and that is
Hmm.
get a close below that, then we'll change the view and we'll be a bit uh, cautious on the market.
And of course, Bank Nifty has been the weaker segment of the market, and as you rightly pointed out, it has been a major drag on Nifty as well. But good bounce back we are seeing this morning. Nifty Bank is up 0.5%, back above the 45,000 mark. But the level of volatility in the past 3-4 sessions alone, I mean, if you look at the last 3 sessions, we have seen over 1.5% movements in each of those past 3 sessions. What do you think is lending to this volatility in the banking pack, Brijesh?
Bank Nifty, I think after the HFC result, that was the day from where the Bank Nifty started to trade with negative bias. And each time wherever there is a pullback, it is getting sold off. So right now, from a technical perspective, even before, previously on 25th of Jan, when the market corrected and it came to the level of 200 moving average, it took support and there was a bounce in the Bank Nifty. And even yesterday, when the low was registered closer to 200-day moving average. So technically, we are in the oversold. So we are going to see some intraday bounce, maybe a 1 or 2 day kind of a bounce. But
Hmm.
whenever this bounce comes, this is getting sold off at the higher level. So my sense is that there is a high probability that this 200-day moving average, which is right now Bank Nifty is taking support, might get break. We may come somewhere close to 44,000 is what my understanding is for the specific Bank Nifty. So if that 44,000 do come on the Bank Nifty, then 21,300 may be seen in the Nifty. So this is what I am assuming.
Hmm.
This may come. This may come. But then we'll keep a watch on it. Right now at 45,000, there is a lot of put writers. They are protecting. They are giving a support for the Bank Nifty. Tomorrow is a Bank Nifty expiry. If today we have a decent close above 45,000, right now it's 45,142 level. If the close is above 40, then again there is a still hope. We may see some bounce. So we need to keep a watch. If 45,000 is broken, then we will have a very cautious view. And if we are having any long positions, we will exit the long positions.
Good morning, Brijesh. I'll drive your attention to Hindustan Aeronautics Limited, which announced their results, 7% increase in revenues, 9% increase in profits. The board of directors has declared a dividend of 22 rupees per share of 5 rupees 5 each. 2.13 lakh shares of the firm changed hands, amounting to a total turnover of 61.95 crores. Earning per share also rose by 18.86 rupees as against 17.27 in the last financial year. But despite that, Hindustan Aeronautics, which has given gains of over 130% over the last 1 year, the last 1 month it has been down almost 5.5%. What do you think is happening? Is it just a correction or people are cashing out?
Uh, Sir, I believe particularly in HAL, I think people are doing some profit booking. Some smart people are doing profit booking. The way there has been a correction post result, I think it is going to see little bit further downside. 2600 to 2550 is what I can sense from the technical point of view. Definitely there's a distribution and profit booking. So I think this may further go down with the overall. And as a defense as a sector, which we were already bullish, we find it right now a little bit stretch from the valuation point also. So we believe this may go further lower. 2600, 2550 can be the immediate downside. Maybe in the next couple of days, that can be the probable downside. So profit booking is what going on. So again, when it comes back to 2550, 2600, we'll review it.
All right, and Brijesh, also wanted to get your view on Coal India, because healthy set of numbers. The company came out with its Q3 print post the market hours, and it's a beat across all metrics. And we have seen some of these PSU stocks react significantly to their Q3 earnings. Yesterday there were a few earning disappointment, and the stocks fell as much as 20%. Good bounce back as far as Coal India is concerned. But do you think that the cracks that are starting to show up in PSU stocks will keep stocks like Coal India, which have delivered good numbers, under pressure too?
Yeah, I do believe because it is overstretched. But then what we can see in Coal India specifically, the levels of 400. So as long as this 400 levels are held, even technically, I think it will see any major correction. So right now with the monthly and quarterly charts, I believe if we get opportunity close to 400, it's again a re-enter kind of a scenario, because on the long-term perspective, we are quite bullish on the counter. In the like we can see, means time frame would be difficult, but then we can see 650 700 on the in the with Coal India over the next couple of months. So bias remains positive. So I would look for the opportunity whenever it comes to 400 level. So this cannot be a profit booking at this level. So even somebody is selling, that means they are just doing a trading bet. Positionally, I think back to 400 levels can be viewed as a buying opportunity.
All right, look for buying opportunities around 400 levels. That's the word on Coal India. But Brijesh, stay on with us. We have a few other stocks that we wanted to pick your brains on. But for now, it's time for a short break.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Owners should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Welcome back. You're watching First Stick here on News9, and the markets are rather choppy, but Nifty has moved back above 21,600 mark. It's trading in the green. But Brijesh, coming back to IT stocks saw some good inflows on a down day yesterday, and one of the outperformers there was HCL Tech, and the stock had also surged to a record high yesterday, and has been forming higher tops, higher bottoms on the weekly chart as well. So what kind of price targets are you assigning for HCL Tech?
Specifically HCL Tech, there is a lot of positions which is getting built up at 1700 strike price. So I think this momentum will stay positive for the month of Feb. It's likely to head towards the 1700 mark. On the way down, 1620 is the immediate level. So where we can place this stop loss if somebody is having a position at current level. Risk reward ratio is not favorable, I know, but then 1660, if somebody is long, should hold with the stop loss of 1620 and for the target of 1700. It's almost a 1:1 kind of a ratio, but then the trend is positive and it's likely to head towards the 1700 level.
Hi, Brijesh, could you give us your picks for the day now?
Yes, sir. So basically, I was tracking this Astral. So this was a very strong bet in yesterday when the market was correcting. It never corrected, and the way the Astral is closed, it's clearly sense with the volume bars and everything. Other technical reasoning, it looks like the stock can see a very good upside in the coming session. Today, whatever the corrections which you are seeing, the stock is already down by some 18 points. I think this remains a buying opportunity. The target would be 2035. So that is the trading call which I'm looking at. Another one is the Voltas. So Voltas is one which is holding up to the prices. It didn't correct with yesterday's market, and today it's already up by 3 points. I think that momentum will be there. This is again a momentum bet with the market trend. So Voltas, we can look for 1120 on the upside with a stop loss of 1056. And lastly, as I spoke, IT was one which was in focus. So Coforge is something which I'm liking at this price. I'll take a long position at current level with a stop loss of 6566 for the target of 6850.
All right, those are the top trading ideas from Mr. Brijesh Iyer. Sir, great insights from you as always. Thank you for joining us here on News9.
Thank you.
But moving on, Nifty is in fact inching towards its day's high. We are back in the green. The markets have turned positive. Nifty as we speak is up about 0.24%, and these numbers are as of 10 a.m. this morning. We are moving higher. Nifty is currently placed at 21,664. Sensex is back above 71,000 levels. The broader markets continue to witness some pressure, but they are recovering from their day's low. Remember, Nifty Mid Cap 100 was down somewhere around 1%. It is now down about 0.4%, and the small cap index, which had declined by about 2% as of this morning or the opening trade, it's down 1.25% currently. VIX has also eased slightly. Volatility index was up somewhere around 2% at open. We are around 0.75% higher as of 10 a.m. this morning, but it's still above 16 levels. But to understand what are the cues to track going forward, and just understand the important factors that will perhaps we'll need to track in the months to come. Let's also bring on board Mr. Ambrish Balega. Sir, the last time we spoke, you had put out a target of about 19,500 on Nifty. The markets have been rather choppy since then. We have had a lot of macro events as well. Fed has come out with its policy, RBI has come out with its policy, we have had a budget, and inflation data has also come out. What's your assessment of the markets now? Is 19,500 still a possibility?
Well, that's still a possibility. Clearly, looking at the sort of valuations which are there in the market, and if you're looking at the news flows, yes, I think the budget was decent, no doubt. RBI policy, to a certain extent, disappointed. I mean, although people were expecting status quo, but clearly, I think there was an expectation of increasing liquidity, I mean, which really did not happen. And I think the markets were also looking at some sort of a timeline for the rate reduction. Even that is not very clear. So I think because of this, we saw some correction at that point of time. And now if you look at the latest sort of macros, the macro numbers which have come out are decent, no doubt. If you look at the IIP, look at the inflation, I mean, decently benign. So that's clearly good. But then on the other hand, if you look at the oil prices, I mean, quietly they have started inching up. And it's very much possible that we could see levels of about 85, $86 over the next couple of weeks. And the other thing which has come up in the last couple of days is the farmer protests. Because if you remember, I mean, last time we had those farmers protests, I mean, it went on for long. There was a certain amount of uncertainty. So that could again come back. And along with that, we may have the election dates being announced quite soon. I think mostly before the end of this month. And once the election dates are announced, you have the election fever starting, which again means some amount of uncertainty for the markets. So overall, I would say that the pressure would be there, no doubt. And this, I mean, if you look at the earlier falls in the last 3 or 4 months, whenever we had those corrections, we didn't really have the mid cap and the small caps cracking. But this is after a long time we are seeing a decent crack in the mid cap and the small caps. If you look at the some of the, I mean the PSU basket, which had moved up sharply, I mean, which was a star performer, we have seen some of those stocks cracking by more than 20% over the last couple of days. So this is what I think could get the retail investors, I mean, slightly rattled. And if they slow down, I think, I mean, the markets can correct because they have been the major ones who have been supporting the markets over the last 12 to 18 months.
But Mr. Baliga, if you look at the last 3 or 4 months, I mean, we have seen one-day falls for the mid caps and the small cap of about 3 to 4%, but the markets have bounced back and clawed back all those losses. What makes you think that this time, the situation is different?
No, because see, whenever there's a small fall, even about 5 to 8%, 10% sort of a fall in stocks, it is looked at as a discount sale. And people who had missed out earlier come back to buy, hoping that the momentum continues. And that proved right, at least for a while in the last couple of months. But then if you start seeing cracks of, say, 30, 40% in some of the mid cap and the small caps, I think that's when people get rattled because they're not used to seeing huge losses in their portfolios. So I'm not saying it's happening right now, but in case we see a further fall from here, I mean, if the Nifty goes below 21,400, 21,300, that's when you'll have the mid cap and the small cap indices falling more because this time we are seeing an underperformance from this side of the market. So when that happens, you will have individual stocks possibly cracking 10, 15, 20% in a very short while. So that's what will finally rattle the investors.
And do you think that, some of these, of course, PSU stocks have very low float and government holding is pretty high, in some cases over 90%. Do you think that could be a factor that could, lead to sharp corrections? Because the past 3 or 4 times when government has tried to offload its stake in companies, they have offered it at a, huge discount, a 10 to 15% discount to market prices. Do you think that could, lead to further pressure in these PSU stocks?
I mean, see, this could have been true. I mean, if we were not so close to the elections, if this was much before the budget, yes, I mean, we could have surely expected the government to come out with a follow-on public offer, which would have created pressure for these stocks. But fortunately, I mean, at least this part is out, at least till post-elections, maybe post-July, in case the markets hold on. And these stocks continue to go closer to the current levels, we'll have FPOs coming in. But then, despite this, I'm saying that there will be pressure on these stocks because we've seen all these stocks becoming 5 baggers, even 10 baggers, like in some cases in the last 12 to 18 months, which is not sustainable because you don't really, I mean, although performance is improved for quite a few of them, no doubt. But then the performance is not commensurate with the sort of an increase which you're seeing in the prices. So because of which I'm saying there is this huge amount of euphoria. There's a lot of froth in these stocks which need to get corrected. And in case, I mean, if like what you're saying, if the FPO or the government decides to exit, not exit, I mean, reduce their holding in some of these counters, I mean, that put in much more pressure. But like I said, fortunately, that is out of the way, at least for the next couple of months till post-elections.
All right. We are, of course, in the midst of the earnings season. And today we have Eicher Motors that will come out with its numbers. Sir, I'll come to you in just a bit. Amit has the expectations or the street word on Eicher. Amit.
The makers of Royal Enfield are due to announce their Q3 results today. analysts are expecting almost a 30% jump in net profits, almost a 8.2% jump in revenues, EBITDA margins likely to go up 300 basis points. Total sale volumes rose 3.8% year on year to 2,48,779 units up. Royal Enfield volumes themselves were up 3%. The number of units sold were 2,28,073. Now, looking at the stock, in the last 1 year, it has gained about 19%. But in the last few days, it is slipping down. How does one approach this stock? Were the sales jumps only because of the holiday season and the festive season, or people are cashing out?
Mr. Baliga, that's for you.
See, I mean, if you're talking of Eicher Motors in specific, like it's been sort of, I would say, a bit of an underperformer if you look at the other auto stocks. Because, the Royal Enfield story played out extremely well over the last couple of years. But then now what we're seeing is there's a decent amount of competition coming in. If you remember, just a month back, Hero MotoCorp has, announced or they have launched a couple of these premium bikes, especially in collaboration with Harley Davidson. I think this will possibly eat into the Enfield market, and that's, I think, what is worrying the investors to a certain extent.
Sir, you spoke about Hero MotoCorp, but compared to Hero MotoCorp, do you think it is that competition that is likely to hurt Royal Enfield in the times to come, or is it something else that and that is why the stock is going down in recent times and has basically underperformed even over the last 1 year?
Absolutely. Like I said, it's been underperforming for the last 1 year. Again, if you look at the performance, the sort of growth which we have seen in the past is not really happening. And now, like I said, with Hero MotoCorp's premium bikes, there'll be more competition for Royal Enfield, which will again put pressure on margins as well as the top line.
All right, and Mr. Baliga, before we let you go, what, the markets have been choppy and we have been talking about it for the past half an hour, but, where do you see valuation in a market like this, sir?
See, I mean, valuation is there in the IT space as well as the pharma space, despite the run-up which we have seen in pharma. I mean, we have had a couple of stocks, especially the last gap months, doubling from their lows in the last 18 months. But still, I think the valuation is decent there. But again, a caveat that in case we see the markets correcting, like the way I said, possibly 19,500 levels is what I'm looking at. In that case, you can't have IT and pharma going against the market. They would also correct, but surely they will correct less than the market. So in market parlance, we say it's an outperformance. But end of the day, it can incur losses if you buy now, but the losses will be lower than the other stocks.
Words of wisdom coming from Mr. Amrish Baliga. As always, sir, always a pleasure speaking to you. Thank you for joining us here on News9. But before we wrap things up, let's look at how the markets are doing, and we are in fact moving towards the day's high. Nifty, as we speak, is steadily approaching the 21,700 mark. We are up about 0.3% on the index. Sensex is also trading in the green. It's up 0.42%. The broader markets have recovered quite significantly, and the small cap index is down about 1% or so. Remember, it was down about 2% in the morning trade. Mid cap index is down marginally as well. Volatility, that has slipped slightly, but it's still elevated considering historical levels. And I think what's driving the recovery is, of course, Nifty Bank, which is up about 1%. It's back above the 200-day moving average, and it's moving higher. In fact, we are back above 45,400 as we speak. And other sectors like your PSU banks and your private banks are also participating in the rally. Auto stocks and IT stocks continue doing well, whereas metals and media stocks are under pressure today. Metal stocks are down somewhere around 3% this morning as of 10:10 a.m. But that's all we have in this edition of First Take. Thank you for watching, and stay tuned with us as we'll be right back with Business Plus.